Hi there, this is Padraig here from the YouTube channel, Facebook group and social media platform for all PAYE workers and their employers to ask and get answers to their payroll, income tax, PAYE and work related questions. The Facebook page and Facebook group are called Payroll Matters in Ireland, and new members, followers and subscribers are always welcome. Today I want to talk to you about how to claim the dependent relative tax credit. Section 466 of the Tax Consolidated Act 1997 provides that an individual may claim a tax credit if he or she maintains a relative or a relative of his or her spouse or civil partner at his or her own expense, in the circumstances outlined here. The income of this relative must not exceed the specified amount of €17,404 for the year of assessment 2020-24. We have more information on the specified amount and amounts relevant for prior years later in this video. Children of the claimant will not normally qualify as a dependent relative, and we have more on this a little further on. The amount of the tax credit currently available, subject to all conditions of Section 466 of the Tax Consolidated Act 1997 being met, is €245. Please note that maintains at his or own expense for the purpose of this section means financially maintaining the dependent relative by meeting their everyday living costs. To qualify for the tax credit, the claimant must financially maintain the relative. Who is a dependent relative? The section provides for the granting of a tax credit to a person who proves for any year of assessment that he or she maintains at his or her own expense any of the relatives listed here below, provided that the income of the claimant's relative or the relative of the claimant's spouse or civil partner does not exceed the specified amount. A relative of the claimant or of the claimant's spouse or civil partner where the relative is incapacitated by old age or infirmity from maintaining him or herself. Example: John maintains his incapacitated aunt who is unable to look after herself. John can claim the dependent relative tax credit in respect of his aunt, provided that his aunt's income does not exceed the specified amount, that is €17,404 for 2024. Example 2. Michael maintains his father who is incapacitated by old age. Michael can claim the dependent relative tax credit in respect of his father, provided that his father's income does not exceed the specified amount, that is €17,404 for 2024. B. The widowed father or widowed mother of the claimant or of the claimant's spouse or civil partner, or a parent of the claimant's civil partner who is surviving civil partner, whether incapacitated or not. Example 3. Mary maintains her widowed mother who lives next door. Mary can claim the dependent relative tax credit in respect of her mother, provided her mother's income does not exceed the specified amount of €17,404 for 2024. C. A son or daughter of the claimant or a son or daughter of the civil partner of the claimant living with the claimant on whose services the claimant, by reason of old age or infirmity, must depend. See the exclusion section a little further on for more details on this. Example 4. Anne is 35 and lives with her mother Joan, who is 80, and depends on Anne to look after her. Joan pays Anne's everyday living expenses. Joan can claim the dependent relative tax credit provided that Anne's income does not exceed the specified amount. Who is not a dependent relative? The following are not considered relatives for the purposes of Section 466 of the Tax Consolidated Act 1997. A relative whose income exceeds the specified amount of €17,404 for 2024. You can see further on the amounts for previous years a little further on. B. A child under the age of 18 will not be a dependent relative for the purposes of this section unless that that minor child is a carer for the claimant and lives with the claimant, as we mentioned earlier. C. An incapacitated child. The incapacitated child tax credit may be available for this relative. The dependent relative credit cannot be claimed in conjunction with the incapacitated child tax credit in respect of the same individual. And where a claimant is eligible for both credits in respect of the same individual, the incapacitated child tax credit will be granted. We have a separate video here for the incapacitated child tax credit. A relative who is incapacitated by old age or infirmity from maintaining himself or herself, but who is not financially maintained by the E. A widowed father or widowed mother of the claimant who is not financially maintained by the claimant. Residence. There is no requirement for the dependent relative to live in Ireland to qualify for this credit. However, the dependent relative must meet the other qualifying criteria such as the income threshold and being incapacitated by old age or infirmity from maintaining himself or herself, or a widowed father, mother or civil partner of the claimant or of the claimant's spouse or civil partner. If you are claiming for a child on whose services you depend on, that child must live with you. If you are claiming for a relative who resides outside the state, you must be able to prove that you meet all conditions of Section 466 of the Tax Consolidated Act 1997, including that 1. You provide assistance with meeting the cost of everyday living or the hiring of a carer. 2. That the relative is incapacitated by reason of old age or infirmity from maintaining himself or herself. And 3. That the relative is not in receipt of income over the specified amount. Restrictions. A. A relative will not qualify as a dependent relative where the income of the relative exceeds the specified amount. B. The dependent relative tax credit cannot be claimed in conjunction with the incapacitated child tax credit, as we mentioned earlier. C. Where two or more individuals jointly maintain a dependent relative, the tax credit is divided between such individuals in proportion to the amounts expended by each individual in financially maintaining that relative. D. Section 467 of the Tax Consolidation Act 1997 prohibits an individual from claiming the dependent relative tax credit or incapacitated child tax credit in respect of the person who is employed as the carer. Example 5. Jane is 37 and lives with her mother Bridget, who is 78 and incapacitated, and depends on Jane to look after her. Bridget pays Jane's everyday living expenses. Bridget claims the dependent relative credit in respect of Jane. Bridget therefore cannot claim relief under Section 467 of the Tax Consolidated Act 1997 were she to employ Jane as her carer. Specified amount. The tax credit is reduced to nil where the dependent relative's income exceeds the specified amount. The specified amount, as provided for in Section 466 of the Tax Consolidated Act 1997, is as follows. Year of assessment and the specified amount are as follows. 2024, €17,404. 2023, €16,780. 2022, €16,156. 2021, €15,740. And 2020, €15,060. How to claim? In claiming in the current year or in the real-time year where the tax credit is added to your existing credits in the current year and you get the benefits through your payroll by way of a reduction in the tax you pay. PAYE customers can make a claim in the current year using PAYE services in My Account as follows. Sign into My Account. Click the Manage Your Tax 2024 link in the PAYE services. Select Add New Credits. Select Dependent Relative Tax Credit under the category You and Your Family. Complete and submit the form. Claiming for last year or a previous year on an income tax return. PAYE customers can also make a claim by completing an income tax return, a Form 12, using My Account as follows. Click on Review Your Tax 2020 to 2023. Link in the PAYE services. Request Statement of Liability. Click on Complete Income Tax Return. In the Tax Credits and Reliefs page, select You and Your Family and Dependent Relative Tax Credit and add it as a credit. Complete and submit the return. Upload all the supporting documentation as requested. A claimant who is unable to use My Account can claim the credit by completing a Form DR1, Claim for Dependent Relative Tax Credit, or Form DR2, Claim for a son or daughter or a child of your civil partner or whose services you depend. As a claim may be selected for future examination, all supporting documentation relating to a claim should be retained for a period of 6 years from the end of the tax year to which the claim relates. So, thank you for watching, and don't forget to hit that subscribe button to keep up to date with more helpful videos we will have in the future. Thank you.